Let's discuss with Ian Bremmer. He's the president and founder of Eurasia Group and G0 Media. Ian, thanks so much for being with us. I want to start with one of the administration's stated goals when it comes to the EU. Would it benefit U.S. producers and consumers if EU nations dropped some of these non-monetary trade barriers that the administration has talked about? Could these tariffs actually yield that outcome?
Yes, I think it can, and I fully accept the administration saying that they're going to be cutting deals with other countries in short order. The U.S. is, of course, the most powerful economy, the largest economy in the world, and countries do not want to be on the wrong side of a trade war. But Europe will not be an early adopter of a deal. It is 27 countries. They are hard and they're very bureaucratic. They have to organize by consensus. Trade is their primary competency as the EU, and the relationship with the United States, frankly, with this administration is untrusted. And they don't know exactly what Trump wants, and the willingness to communicate, the EU is not going to be a top priority. So I'd be very surprised if we actually see an agreement between the US and the EU within the 90 days that the Americans have offered this suspension, unlike, say, Japan, where I wouldn't be surprised if we see an agreement in a week or two.
Wow. How likely is it, do you think, that for allies, specifically in relation to the EU, who are going through this process now with the administration, some bellicose rhetoric, some tariff threats back and forth, how likely is it that they wind up moving economically closer to China? What are the implications there?
They're going to move economically closer to lots of countries. For the last 10 years, you've probably heard the term de-risking, a term of art that the US and other countries talks about China, that they want to reduce their exposure to China because China can't be trusted. They don't respect intellectual property. They don't respect contracts. They don't respect treaties, all of these things. Well, the Europeans and many other countries are now starting to talk about de-risking the United States. Very hard to do because the US is such a large economy, and also because the Europeans need the US for some advanced technologies, need the US for defense, of course. But I'm already seeing the EU speed up their conversations with Latin American countries to make sure that they get a fast-track approval of an EU-Mercosur trade deal. I see the same thing happening with Delhi between the EU and India, try to improve and fast-track those relations. China's going to be a bigger challenge because the Europeans don't suddenly trust the Chinese more just because they trust the Americans less. They still have big problems with dumping. Their automotive industry has been destroyed by the Chinese. There are lots of places where they don't want Chinese advanced technology or chips because they're concerned about China scooping up their data and surveillance. None of that has gone away. So I think that it's less about Europe tilting towards China and more about hedging with pretty much everybody else they can. And that will take a long time.
That is a really good point. I do wonder about U.S. trading partners in Southeast Asia, where Xi Jinping is touring right now. Countries that at one point were eyeing this U.S.-led trade pact, the TPP. It was supposed to be this way to counter a rising China. Obviously, Trump tore that up. Isn't the administration pushing those same partners away while claiming that it wants to fortify relations with them in order to present a united front against Beijing?
Well, first, just a little fact check on the history, right? So this was Obama's deal. He failed to get it passed. Hillary Clinton ran against Trump. She refused to support it, even though privately she obviously did. The American people did not have a political willingness to support more free trade, even with core American allies all over the world. And so, yeah, the Trans-Pacific Partnership would have been great for globalization, but if Americans don't support globalization, then how do you get it done? So Trump was, in a sense, ahead of his time on this one. But now you have Xi Jinping leading a trip all this week to Southeast Asian countries. He just went to Vietnam, 45 deals, economic deals that the Chinese are cutting with Vietnam. And Trump says, well, the Chinese and Vietnamese are trying to screw the Americans. Well, a lot more effective in doing that on the back of all of these US tariffs. So, I mean, the problem is if you're going to go after China, which you know is flouting WTO rules, which you know is a serious competitor and adversary, you should not be beating up on America's friends simultaneously. You'd be much better off coordinating with friends against China. And that, of course, is not the way that President Trump has chosen to go about these trade and tariff wars and deals. And as a consequence, he's backing away. He's offering concessions and exemptions. And a week into this, he looks weaker on the global stage than he did on Liberation Day.
Ian Bremmer, always appreciate hearing your perspective. Thanks so much for joining us. Significant developments, or lack thereof, in tariff negotiations between the United States and Europe. We just learned the two sides made little progress in their first round of talks. This news comes shortly after the EU put out a list of more than 400 U.S. products they say they'll tariff if a deal does not happen by mid-July. On that list, toilet paper, makeup, tobacco, and clothing as well.
As for ongoing talks with other countries, here's what the White House just had to say about that.
We've had more than 15 deals, pieces of paper put on the table, proposals that are actively being considered. And as we've said consistently, more than 75 countries have reached out. So there's a lot of work to do. We very much understand that, but we do believe that we can announce some deals very soon.
Here with us now, John McNiff is the founder and CEO of Modem Capital Management, and Ross Gerber is the co-founder, president, and CEO of Gerber Kawasaki Wealth and Investment Management. Good to see both of you here. John, I first just want to start with you and get your reaction to what the press secretary had to say there, that they expect to be announcing deals shortly and that a lot of these countries had reached out.
Well, one, that's obviously positive news. We want to see that in these developments. And the markets will respond very well to that after last week's sell-off. So any positive news we get around tariffs being decreased is a positive for the U.S. consumer and U.S. businesses. So that is all positives that we want to see.
Yeah, probably any certainty that can be had right now is what people are after.
Yeah, I mean, when you look at like economic conditions, uncertainty, we deal with it every day. But largest uncertainties within your supply chains, all of the negative effects of the tariffs really affects consumer behavior. So what happens is you start this self-fulfilling prophecy. So if you're worried about your income, you're worried about you stop traveling, you stop spending money, you're worrying about things like that. The same thing is happening with businesses, right? They're worried about the supply chain, they're worried about their access to parts, they're worrying about the consumer. So they stop investing in capital on long-term projects. So this spiral that begins with the concept of uncertainty spiking in the financial markets, you'd call that volatility, is a negative effect of the tariffs, and is something that I think we need to get ahead of because it can have long-term consequences. And once the boat kind of shifts, right, it's really hard to kind of turn back.
Ross, when it comes to these products that the EU is vowing retaliation against, they aren't really the biggest U.S. exports to the EU. I wonder what you make of that and what U.S. investors and businesses are really looking for out of these negotiations.
Well, as was just mentioned, certainty is what we've lost. And for pretty much most of the small business in America right now, this is an incredibly difficult time because you have a double whammy of not being sure what your costs are, and also seeing less demand at the same time. And it's very hard to make any capital allocation decisions for businesses here with this kind of uncertainty. Any tariff at all brings up the cost of living and the cost of goods for Americans. And the issue is how much or little tariffs are going to be between all the different countries. So the uncertainty isn't going to go away for some time, but the consumer's already voting, and they're voting by not spending money. We're seeing deals falling apart. We're seeing real estate deals fall apart, leasing, capital improvement. We're seeing consumers spending less. It's already happening. We're already at the cusp of a recession, and it's very possible we could run into a recession. So that's where we're headed. It's just sad, but just a self-created recession.
It seemed like there was a tariff briefly placed on your internet signal there. You went out and came back. We're fortunate that you're back with us. John, I do want to ask about China's response to some of these moves by the Trump administration, specifically this Bloomberg report that Chinese authorities ordered its airlines not take any further Boeing deliveries. I wonder how significant that is.
Obviously that's very significant. Boeing is one of the largest producers of aircraft in the world. It's a big economic engine for the U.S. And these are kind of these butterfly effects that are occurring once you start going down this road of tariffs. And the tariffs are a very blunt tool, right? And we all know they're a regressive tax, and they're increasing costs for both on the consumer and on businesses. Then we had reciprocal tariffs come in. So that back and forth fighting has escalated prices. You're now going to start to see what you also saw over the weekend with the restrictions from China on rare earth metals and minerals, that these are other steps that are actually more supportive for the Chinese economy than getting into a tariff war with us, but have a very negative effect on the U.S., right? When you do a reciprocal move like that, you are now playing, chess in a different part of the board, because we need those rare earth metals for our manufacturers, for everything from cell phones to cars. You're going to have car earnings next week. You're going to, it'll be too early for this, but the outlook by the CEOs is going to be very interesting. But so you're seeing these kind of knock-on effects of what the tariffs are causing other countries to do, and obviously they're not positive for us as a consumer.
And Ross, the Chinese president is now on a tour of Southeast Asia right now. We know he's also met with the Spanish prime minister last week. As an investor in American companies, I'm curious what you think of just this dynamic we see playing out now. The fact that Xi is going around meeting with U.S. allies, having these conversations amidst this backdrop.
Well, I think that you just said U.S. allies. Who is our allies anymore? Because I think we just burned our bridges with all of our major allies. So I look at it the opposite. China is going on tour, signing deals left and right is their goal, and working out, agreements with the EU, because the EU and China are 2/3 of the world, and we're the other third of the world as far as major industrialized economies. So we're not the majority of the world's industrialized economies. And this is exactly why this strategy of blunt force tariffs and bullying other nations doesn't create the outcome that you want, because the other nations don't want to be pushed around. Now, if you look at Chinese history over any period of time, and certainly the long term, they're willing to deal with economic pain. They're fine being isolated from the West. They'll trade with other people. And they've done this for thousands of years, a lot longer because even been around. So, we're really, it's like we act like we're in this position of strength, but yet we're spending $2 trillion a year more than we make, and we need to borrow that money from the same people that we're pissing off. So we've created from a position of strength of negotiation into a position of almost desperation and weakness, because if they don't get deals, they look real bad too, and markets will go lower. So, Trump's going to have to deal with market forces that Xi doesn't have to deal with. And so as I think that we all can negotiate better deals with our partners, but there's a way to do things, and this just doesn't seem like an effective way.
Such a significant point about leverage that Beijing has in terms of the debt that they own from the United States. I wonder, Ross, quickly, this vow from Trump and his administration to put tariffs on pharmaceutical products. I mean, there's no way that isn't going to impact patients and folks who rely on critical medicines.
Right. And so every way you do the math, the cost of living in the United States is about to go up, and it could go up fairly substantially. And voters and consumers are going to see this, and they're going to push back. With things like pharmaceuticals, you don't have a choice. And so you're just like jamming people that oftentimes can't even afford the pharmaceuticals they're paying for now, and just raising prices. It's really just the biggest tax increase on middle income and lower income Americans in history that I can think of in modern history. And why there isn't more pushback against this is crazy to me. And then the second thing is, I don't even think this is legal. If you really analyze the way Trump is putting these tariffs on, is he's using some obscure law, and I don't think it's legal. And the fact that Congress hasn't pushed back and doing what's best for its constituents, and this is political. It doesn't matter whether you're a Democrat or Republican, this is going to hurt you. And if you don't understand that, you're going to see it in the next month as prices are already going up and are going to keep going up. And so, I hope that people call their senators, reach out to their congresspeople, and express their dismay that this is the policies that 75 million people voted for. I don't think they realize that. And now we're going into a tougher time for America, and it's all self-created. We were in such a good position just 3 months ago, and it's just so sad to see so much wealth destroyed. Almost 10% of American wealth has just been destroyed in the last 2 months. Even just really 2 months.
Our money lead, U.S. stocks closed slightly lower today as investors await the next salvo in President Trump's tariff and trade wars. White House Press Secretary Caroline Leavitt told reporters earlier today that President Trump is actively assessing more than 15 trade deal proposals. In case you have not noticed, Chinese President Xi Jinping is traveling through Southeast Asia, meeting right now with U.S. trading partners such as Vietnam and Malaysia, so far urging them to resist, quote, unilateral bullying. Here on The Lead, we're looking at how the tariff wars are affecting specific U.S. industries. And joining us now is Greg Ahern. He's president and CEO of the Toy Association. Before that, he was the chief marketing officer at Toys R Us. Greg, thanks for joining us. What do our viewers need to understand about the toy industry and how Trump's tariffs are affecting the industry?
Well, 145% tariff is tough on any industry, but ours is truly unique from the standpoint that 96% of the manufacturers here in the U.S. Are considered small or medium-sized businesses. So when you think about these businesses and a 145% tariff being put on them, it's untenable for them. They don't have the cash flow, they don't have the access to capital, and it's basically locking up production in the toy industry. No toys are currently being produced in China, and there are reports that major retailers here in the U.S. are starting to actually cancel orders. So Jake, Christmas is at risk.
Huh. Your organization says nearly 80% of all toys sold in the U.S. are manufactured in China. Do you think it's possible to stand up some sort of U.S. supply chain for the toy industry? And I mean, that's obviously the goal of the Trump administration. Is that possible? And if so, how long would it take?
Well, there are some toys that are made here in the U.S., but they're mostly paper goods or highly automated goods, and it represents a small portion of the toys that are manufactured. To be able to stand up manufacturing in the U.S., is it possible? Yes, but in the short term, absolutely not. It would take 3 to 5 years to be able to build out the capacity, the specialization. Again, a lot of the toys that are made in China, as you said, 80% are hand labor made toys. It's the have face painting on a doll. It's the hair decorating. It's placing them the correct way in packaging. A lot of this is hand labor that can't be automated here in the U.S.
And obviously, labor rates are much higher here in the United States than they are in China. If this industry was moved to the United States, even after 3 to 5 years or whatever, does that mean it would just explode in cost?
It most likely would. The toy industry is a very low margin industry. If you're making high single digits or low double digits as a manufacturer, you're doing pretty darn good. So if you take any factor like labor, that is a major factor in toy manufacturing, you raise that up, absolutely would impact the cost of toys here in the US. So you could probably imagine a 20 to 30% price increase in toys if they were moved here into the US.
Are there any kind of residual impacts of these tariffs that we're not even thinking of? For example, I know toy safety is something very important for your industry. Kids, I mean, there are some toys, I think there's like a size limit. It can only be so small because you don't want kids to choke on toys. Are there any safety recriminations or repercussions?
There are. You've got a lot of folks, the branded toys that are doing it right. They go through all of the testing, over 150 different safety standards that toys have to pass, because we want to make sure that safe toys are in children's hands. But when the prices of these branded toys go up, it swings the door open potentially for counterfeits, knockoff toys that potentially are unsafe, sold through some of the online sellers that we know. And the last thing we want to have is any unsafe toy getting in the hands of children, but they will be at lower price points. And it's hard for consumers to tell the difference between a counterfeit and a knockoff and a safe branded toy. And so we don't want that to happen this year.
You just stated that Christmas is at risk. What's your advice for parents or grandparents looking ahead to the holidays?
Well, I think, if we don't get these 145% tariffs moved off, production right now is stopped. And all of the toys that will be on the holiday shelves this year are actually supposed to be produced now. April, May, and June. They're all produced and then brought here into the US. So there is no alternative in terms of manufacturing short term for the 2025 holiday season. So reach out to your local representatives. We're reaching out to the administration. We're hoping that they hear us, that they understand the uniqueness of the toy industry, and that everybody wants to make sure that Christmas is going to be fun and there'll be toys under the tree for kids this year.
Thanks, Greg. Really appreciate your time today. Thanks for coming on. In our politics lead, some Democrats are ramping up calls for an investigation into whether President Trump intentionally manipulated the stock market so that his allies and even some members of Congress could profit. The concern stems from Trump's Truth Social post on April 9th, where about 4 hours before he announced his 90-day tariff pause, causing the market to soar, he posted, quote, "This is a great time to buy, DJT." DJT, those are the president's initials. It's also, coincidentally or not, the stock symbol for Trump Media and Technology Group. When asked by a reporter last week whether Trump's Truth Social post was an attempt to manipulate the stock market, National Economic Council Director Kevin Hassett pushed back, saying, quote, "I don't think that Trump ever had any other intent other than to get people to the table with serious policies," unquote. And joining us now, one of the House Democrats raising concerns about all of this, Congressman Mike Levin of California. Congressman Levin, have you seen any evidence of insider trading from either members of Congress or President Trump's allies, instead of that just general advice that Trump gave for people to invest?
Well, Jake, it's good to be with you. And to the extent we have evidence, it's circumstantial right now. So we know that President Trump had a number of conversations with members of Congress and with members of his administration leading up to the decision to have the 90-day pause. And, for example, we know that there was a dinner the prior evening with Republican members of Congress and the president. We know that he spoke with a number of people on the day of the decision. And I think what we want to know is who traded both on the 8th and then pre-market on the 9th, leading up to that post on Truth Social at 9:37 a.m. And that would be of most interest to me. And then, of course, who traded between 9:37 and then 1:18 in the afternoon, last Wednesday afternoon, when the pause was announced. Because of the Stock Act, which is the law that governs all of this, we've got a very limited data set so far. A lot of that information will come out in 30 to 45 days. But a number of us are calling on Mike Johnson to have full transparency and accountability for all members to see what they traded between April 2nd and April 9th. And Jake, for me, it just reinforces the need to have a full ban on members of Congress trading stock at all. And I'm encouraged to see that Leader Jeffries and others are now fully behind the idea of that ban.
Yeah, that ban didn't happen when Democrats controlled the House and Senate. Why not?
Well, it certainly wasn't for lack of my trying. I've been calling for that straight through since I started running for Congress back in 2017. My wife and I divested any individual shares of stock and put them all in mutual funds. And look, I think there is bipartisan support for this. In fact, President Trump himself back in 2022 said he supported a stock trading ban. I think there's a great deal of momentum. We've got a bill now that has several Republicans in addition to many Democrats on board. And I think if a vote were allowed on the floor of the House, I think it would pass the House and would pass the Senate. We continue to build momentum behind it, and I'm hopeful that that vote will occur. If it can't occur in this Congress because Mike Johnson doesn't have the courage to do it, then hopefully it will happen if Democrats retake the House after next year.
It would be great, obviously, if voluntarily every House member disclosed their trades on the dates that you talked about, any trade transaction between April 2nd to April 9th. Are there Republicans that are curious as well?
There are, and there are roughly 15 who are behind our effort to try to have a stock trading ban and who have expressed concern, at least privately. It's amazing what they'll tell you privately, Jake, but I think at the end of the day, the existing law only goes so far because we'll see, like I said, between 30 and 45 days from now, which members traded, but we won't get a timestamp. So in other words, we'll see if they traded on the 8th or the 9th. We'll know what they traded with rough ranges, but we won't get that level of granularity. I know that my friend Adam Schiff has called for a similar investigation into what members of the administration may have done. And it's very simple. We should not be using our position, in which we often get access to material non-public information, to pad our pockets. We serve the people. We shouldn't be serving ourselves in that manner. It's fundamentally wrong. And a coalition of people across the political spectrum agree.
I asked you earlier why Democrats didn't do this when they controlled the House, and you said it wasn't for lack of your trying. Without naming any Democrats who were against it, can you give us at least any sort of vague idea as to why you didn't do it, Democrats didn't do it when you controlled the House?
Jake, I think that there are politicians of both parties that for too long have profited off the rules as they are. That's why it's very tough for us to enact campaign finance reform in the wake of the Citizens United decision. It's why it's very tough for members like myself who don't take any corporate PAC contributions. We're at a disadvantage often. And when the system is working for incumbents, it's very difficult for those incumbents to want to challenge that very system. And look, I know that there's a certain degree of cynicism here, but I think this is so critically important and is so resonant with people across the political spectrum. When I speak to my constituents, I just had a town hall packed with people, and when I brought up the need for members of Congress to not trade individual shares of stock, that was probably one of the biggest applause lines that I got, and there were a lot of Republicans in attendance.
Economic warfare. President Trump saying that China must make the first move to end the escalating trade war, delivering that statement through his press secretary.
The ball is in China's court. China needs to make a deal with us. We don't have to make a deal with them.
This after China, the world's largest market for airline purchases, reportedly is ordering its airlines to halt all deliveries of Boeing products, and with that, delivering a major blow to America's largest exporter. Out front now, Dan Ives, veteran tech stocks analyst, Peter Tuchman, longtime Wall Street trader, and the one and only Richard Quest. I feel like I should say to everyone out there, gird your loins. You're hopped up on the fact that you think that there's kind of a cascade of evidence now of how bad this could be.
I don't think I know. Boeing. So Boeing's in trouble because it can't deliver to China.
Boeing's getting hit from every angle.
But it can't deliver to China, Eastern China, Southern and Air China. United Airlines. United today said that when it comes to giving guidance, they were going bimodal. They've given guidance on the basis of what's going on at the moment and if there's a recession. I cannot remember a company, an airline, giving two sets of guidance, if it's normal and if it's a recession. Nvidia tonight basically taking a charge because they say they can't sell certain chips into China, so they've now written down certain numbers of values. This is going to grow and grow and grow with more companies in different parts of the economy saying what the effects are, and this is how your recession happens. Yeah. Is that not?
I think, look, I think you nailed it. But we're now starting to see this economic snowball go downhill. And if you look at it, Nvidia, you look at the Boeing, and I think that's the worry, is that you can't stop it.
You can't have a choose your own adventure in terms of guidance coming from a major company. That does nothing to offer any confidence, says the person who knows nothing about any of this.
Well, look, me and Peter have talked about it. It's like you've cut big tech at the knees. And Nvidia that's the first step in terms of what we're seeing. And look, and from a White House perspective, you're playing a game of high stakes poker with China. And the reality is the market and the economy that's caught in the middle.
I mean, you know what I think is fascinating, though, it is how China's response to it. Boeing is not just an airline company. It's in the Dow Jones Industrial Average, those 30 stocks that represent America. So it's really a shot across the bow against us. This is a tit for tat, but in high stakes, high stakes playing in the sandbox. Really,
that's what I was going to ask, because when it comes, China's sending a message. China's sending a message.
Huge.
You also you heard from Caroline Levitt. You've heard from others that Trump says that China needs a deal more than we do. Do you think that is accurate?
No. Well, that shouldn't have to be the way it is. Look, we're at the end of the day. Look, we should be aligned. Our motivation should be aligned, and it's not. That's why you're talking about this is a battle of egos. right? I mean, as far as I can see, as opposed to, you know what, look, yes, he has an agenda. The agenda is about policy around tariffs, but at the end of the day, we must make a deal. If this was about calling everyone to the table to negotiate, that's not, I guess that's his approach of negotiation, but at this point, it's not every day we're being notched down. We don't know what tomorrow. It's a bit of a bipolar situation.
3 words: rare earth minerals.
That's
Right.
They've already pulled the rug out. They are essential in vast parts of the US industry. The China is, the two sides need each other. Who needs who more is an academic question.
So when they say, when the question is posed, who needs to blink first, who needs to pick up the phone first, you think that's a ridiculous question?
It's a ridiculous question because, as Peter and Richard talked about, the reality is that you look at big tech. Right now, it's the hearts and lungs that are in the supply chain. When you look at the rare earth and you look at the materials, how are you making the chips? NVIDIA, what I view as probably the best disruptive technology coming in the world, now basically they can sell into China, and that came out after the market. So you're starting to see these chips fall, and this is the reality. This is not just microphones in the Beltway, right? Now you're seeing the reality hit in terms of the economy.
But also realize that NVIDIA, it was the flavor of the moment. It was the stock that took, even though it was a broader footprint than just NVIDIA, Mag 7, but it was the biggest stock. Think about it. February 2023, NVIDIA was a $108 stock. He called it, and my partner David Green called it the same. February 2024, it was a $900 stock, right? That was one of the biggest contributing factors to the rally that we saw in the last 2 years, double-digit growth in the S&P 500. So to start hitting those, it's sort of it's a radical attempt to break our market down.
The golden jewels. It's the golden goose of tech. That's what you're hitting here.
Right, and the stock market, and the stock market.
What are you handing out?
You're talking about NVIDIA and all these high-tech, highfalutin stocks.
You're so highfalutin, you two.
Here we go. This is
Toothpicks?
Toothpicks.
Yeah.
Toothpicks. Guess where they're made?
Let me guess.
Idaho.
Idaho.
Made in China, that is now going to cost 145% more because of the tariffs. You extrapolate these toothpicks across everything else.
So start handing them out and start saving them up. You mentioned that there's no reason to get into this tit for tat. Jamie Dimon talked about tit for tat today, saying that we don't need to get, he's saying exactly the same thing. Let me play what he said. He just said this in a new interview.
I don't want to get this tit for tat type of thing. I think adults should talk to each other and listen to each other and acknowledge when the other person is right, or at least has a good point. I don't think we have any engagement right now, but that can start tomorrow.
My question is, how does the market react? When does the snowball effect become irreversible? Like, how does the market react if there continues to be no signs that there is any engagement?
It's good. You have an answer to that? I mean,
go ahead. I'll start, and then Piero.
Yeah.
I would say in the next 30 days, you need some sort of sign that we're going to get some negotiation that started with China, whether it's a summit, whether it's calls, and then ultimately a de-escalation. Because, as Richard's talked about and Peter, this goes past 30 days, market said, okay, hold on a second, this is going to continue. Then you start to get into that Armageddon scenario. Two bullies in the backyard, no one's blinking.
Look, we've seen it from February 19th, the market was trading at record highs. The first 6 weeks since the first mention of tariffs were around Mexico and Canada, when the market started to spiral down and then escalate, down to the point where last week, when we had those days that were so severe, we cannot look at those 2 days where the market did rally 900 points. The confidence in the market is broken. What happened in the bond market last week, as we talked about, you can't bully the bond market. Damage was done to the whole infrastructure of the trading community in so many ways around that, and that's a very China-centric situation when it comes to bonds.
Is it Pollyanna, Richard, to think because the administration said that Trump is looking at like 15 plus deals right now, trade deals right now. Is it Pollyanna to think they start announcing deals and it fixes everything?
No, it's not, because once they start announcing deals, there will be an element of certainty vis-a-vis that country's exports to the United States. But I do believe that the days of a free trade agreement of zero tariffs, because what they've got to deal with is the non-tariff barriers. I think the president is very comfortable with the idea that he's finally got what he's always wanted, which is a tariff regime. 10%. The world can live with 10%, but he's finally forced the world.
He's going to make the floor be 10.
I cannot see that.
But I would just add, you need to get deals on the table, whether it's Vietnam, whether it's South Korea. You don't get deals on the table by the end of this week, then market starts, okay, our deals are there. And it comes down to, as Peter talked about, you can't bully the bond market. The 10-year speaks volume, and that forces the hand.
You know what? The markets, look, history tells us the market can handle anything. We've been able to figure that, except the perfect storm. When it's like the wave, you get hit by wave after wave after wave. If we don't settle something up on the China side, then the market is going to start to suffer.
And you can't obfuscate it.
No.
You cannot. The market, particularly the bond market, will see through flim-flammery.
The 10-year and the dollar.
Flim-flammery.
And that's
you have to give attribution.
That's a 1600 SAT word right there.
Who here scored that?
That's the
None of
spelling
us.
bee. The last